Good morning, everyone. Welcome to Admiral Markets webinar. Today's session is going to be on strategy. We're going to take a look for that strategy at Forex, commodities, and stock indices. Before we do that, though, be aware of these disclaimers. First of all, this webinar is shown to a global audience. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if it is suitable for you and other details. Also, please be aware that trading for exchange at global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is for educational and informational purposes only. By continuing watching this video and recording and live webinar as well, of course, now, you agree with this disclaimer and you are aware of the risk involved when trading. Quick review of what we're looking at today. As always, we're looking for defining the trend and momentum to see where's the flow going. Do we want to trade with it or perhaps against it if there's a potential reversal in the cards? Secondly, how do we want to trade at? What kind of opportunity are we looking for? Fibonacci or patterns. But today we're going to be focusing on the Keltner indicator. Thirdly, what could be blocking a trade from materializing? Is there, for instance, a big news event that we want to be careful of, or is there some big support or resistance level nearby? And fourthly, if the first three steps are all good to go, then we're looking at where to trade it and how to trade it and what kind of reward to risk is available at that spot. All right, from a risk point of view, we might as well take a look what kind of events we might have. And we have home sales apparently marked as red this week, and otherwise we have some lighter news. You can check it out yourself by going to admiralmarkets.com, clicking on analytics, and then going to Forex calendar. And if you're right away there, you know there's a lot of options. You can find out more information about the market sentiment, market heat map. There's info on auto charts. There's some info on our blog, so you can hear, for instance, Sunday. I talked about moving averages and what I find useful with them and etc. and you know why I use them and all that kind of stuff. So that actually there's another part coming today. So this is kind of part one. Tomorrow or today is part two. So that's an example. But you know there's basically twice a week, Sunday, Wednesday. Nanette and I talk about various things like perception of risk, and let's see, recently I was writing about, let's see, there was an interesting topic. Oh yeah, about time paradox. That's the one below here. Here it is. All right, so just to give you an example. Alrighty. Enough on that. Hi, Bob. Hi, Evalda. Good to see you finally, because yesterday we had some problems, or not we, but the software from the organizer had problems. So it was not us, but it was, you know, generally speaking, a software problem with this provider. So sorry about that. And luckily now it's working though. So let's take a look at the euro dollar. What I see is price having some struggle with the Keltner at this moment, and it seems to be bouncing at the 61.8 as well. So this could be reversal territory, but I want to be a bit cautious with that because it could easily be a kind of a triangle formation as well. As you can see, this could easily be a kind of an ABC, a pattern, ABC flat, an ABC sideways correction. So from that point of view, this could be a bouncing spot too, to make one more high at these targets here, up in here, these resistance levels and fib levels. So that could easily happen too. So, I mean, I think considering the bullish environment that we've seen last week's bullish candle as well, I think that shorting is a bit too soon at this point. So I think that obviously there are some things to think about here regarding the shorts, considering the Keltner, the 61.8, bearish candles here. But I think it's still too little all in all compared to the weekly candle that's pretty strong. And I'm expecting a break of that high. And considering the 4-hour chart as well, the momentum and the correction. So from this perspective, I think waiting for a short, basically if we go back to the daily, waiting for a short at the 78.6 fib makes more sense. 114.65 is the level, and I think waiting for a turn at that resistance zone makes better sense. We see clearly a lot of resistance in this level. Maybe on the weekly chart we can see that a bit better here. Look at that. You see all these levels here. This is a heavy zone. So it's a 78.6 fib as well. So I think that makes a bit more sense than now at this moment. All right. Now, if today were to turn bearish, it could be a bit different. If today's daily candle, turns bearish, that means that basically price probably closed somewhere in here, most likely near the 50 fib. I don't know how exactly today's price action would look, but maybe we had a bounce here and then a turn like this, and price closes here. In that case, I would say that that is probably going to be a triangle break. Let me do that again. Like this, you can see already, if you connect the bottoms like that and the tops like that, that the triangle was thereby broken to the downside. I would be more interested. I probably would trade it to the downside. If we get a bit of retracement tomorrow of today's bearish candle, sorry for all these talks about today and future, but I hope you get my point. A bit of retracement there of yesterday's candle, and I think that could be a short that's interesting. You see the pattern already evolve. So, but that I would like to see the confirmation today, basically. Ways to trade it could be this pullback. It could be also the next break, because if we extend this pink trend line here, you can see that there could be another break here as well. So in that case, we also have clear two lower highs, and this would be the third. So basically, that's already a downtrend in that case, or at least the start of a downtrend, perhaps. Right? So that's a bearish scenario. Bullish scenario, I think, is better available for today. One way would be to break to trade the break, and one way would be to use this Keltner. We see the Keltner on the 4-hour chart. So one way would be to wait for Keltner to basically close with the 4-hour candle that is bullish, that is breaking above the Keltner resistance, that is near the high. A candle like that is a good breakout candle. So let's say we got a 4-hour candle like this. That could be already a good signal. But the next one, if it goes like that, that would be the breakout candle. That would be one way. Maybe look at lower time frames to see if there's a retracement possible before taking it to the upside. That's always useful, because if you see a good 4-hour candle, perhaps we'll get a bit of retracement. And sometimes looking at lower time frames gives us a bit kind of more information about whether we get that retracement or not. So, for instance, on the 5-minute world, we see that prices rocketed like this. It might be useful to wait for price to retrace. Add on the oscillator, the awesome oscillator here from Bill Williams, for instance, or the MACD. You'll see probably this go up. What we're looking for is the MACD to go back to the zero line. Once that happened, then probably we've already finished or about to finish our 4-hour candle retracement. So from that point of view, I think we could trade the breakout to the upside. Target is at 78.6 fib, but as I said, 114.60 main target, and that would be the bullish scenario for today. Other opportunity could be, if we zoom into the hourly or even stay on the 4-hour, is a potential bounce here as we make kind of a ABC zigzag like that. It could bounce. The only question is, will it bounce and continue to break, right? Will it break above the Keltner, or will it bounce, run into some struggle because of the pattern that we have here, and then start to actually move down today? And we get that bearish candle I just spoke about a while ago, right? So that's why if I take a long in here, I'm going to be monitoring how price responds up around 113.25. If I see some struggle, I will probably just move it to break even or reduce the risk at minimum and see if it has enough muscle and power to push through. If it doesn't and it starts to waver and go down, I don't want to stay in that trade, and I'm happily exit with break even if possible. All right, so it's possible to take longs here, but we're kind of exposed to that scenario that it could be a bearish day. So if we draw trend lines here, let me take away this fib. So if we got, I would say a bullish candle, if this becomes a bullish candle, that could be already enough to take a bounce trade there. Stop loss probably below this bottom at first. Then once we get the next bullish candle like this, if it's a strong bullish candle, we can move it to break even or just below this low, or that's what I'll be doing. Then hopefully we'll get the next one and we're good to go. I might even think about a scale in here, if that's the case. If not, and this is not a bullish candle, but this turns into a big wick like this, then I know what to do. I will be moving it definitely to break even, probably even moving it maybe up to here to lock in some profit. Because if there's not a bullish candle, but a big pin bar like this, that looks like it's rejecting, and there's a bounce off this trend line, resistance trend line, and price will probably test the support. And if it breaks that support, we'll have maybe in the later New York session, there could be a breakout to the downside for some 40, 50 pips probably. The day will probably end up like this with a daily candle that looks like this, with a wick here, with a bearish close like this. All right, and then tomorrow, looking for retracement for downside probably. All right, so yeah, that's a lot of scenarios here, I know, but yeah, that's basically, I guess, what I'm looking for, and the reactions depending on how price moves. Other could be the hourly chart. I think that keeping an eye on this hourly makes sense too. If we get engulfing twins here, for instance, could be a bouncing spot and a confirmation of a bounce as well. We see that price is actually, when you look at the Keltner, price is trying to go through it. In fact, we get a close below it, which is warning us that it is at this moment definitely bearish. So yeah, I would like to see a close above the Keltner and probably even above this high. And I want to see a Gulfing Twins there. That could be, but it's not going to happen probably. We got 1 minute left. So that would have to be probably next hour. But although this is already itself actually, could it be a bullish setup? But I'd probably rather wait for the next one to confirm that, or even wait for the 4 hour. We can take a look at lower time frames. Let's see what's going on here. There could be a head and shoulders going on here. In fact, inverted head and shoulders. We got 1, 2, 3, 4 candles on the 5-minute chart, not breaking this low. So if the next candle and next candle don't break and we get a hook back like that, that could be a bouncing spot too. It's a risky one on the 5, but 50-minute pin bar, I think from that point of view, there is a good chance there is a bounce here. It depends on how much confirmation I want, considering the trend line, considering the V bottom here, support. I think there's a pretty good chance of a bounce actually. So it depends, I guess, how demanding you want to be. 50-minute chart already has a pin bar. 1, 2, 3, 4, 5. So we can keep an eye on it 10 minutes from now. See how this 5-minute chart looks like. If it's struggling here, it might be a very lucrative opportunity in the sense that stop loss could be relatively tight. It's risky, but if it bounces, there could be good R2R. So we'll keep on this 5-minute chart. But we discussed many options: 1 hour, 4 hour, 5 minute. 1 hour, 4 hour probably will be after this webinar. 5 minute we can keep an eye on throughout or during this webinar. One question, we'll move on. I know we talked really long about the $0. Is that a head and shoulders pattern on the 4-hour chart? I think Derek is talking about. And yeah, it is possible indeed, definitely. And that could be potential for a pattern that could support basically the failure of this up move, and the reason why I could have a bearish bounce and basically eventually break that neckline, tomorrow hook back to the neckline and make a downside. So yeah, that would be, I agree, that could be a, an extra reason why it could make that bigger downside. Another reason, 4-hour divergence, by the way. So yeah, there are good things to see why a reversal might happen, and but I rather wait for today to prove itself. Alrighty, let's move on. Let's take a look at pound and the yen majors, and we'll take it from there as well. Take a look at some others after that. So my views on the pound in the near term, when looking at this bullish candle on the weekly, it definitely, for the moment, looks like we're going to make a bigger correction. If you look at the number of candles, 1, 2, 3, 4, 5, 6 candles as well. So I think that for the moment, it looks like we're going to probably make a bigger correction. But all in all, it's a difficult spot because we got clear resistance here still, and we can draw a support line too. So from this point of view, it looks more like a triangle, and if anything, I would still, despite the fact that the weekly is consolidation and we have weekly candles, I would probably be more inclined to look for short at resistance up in here at the Keltner or a bounce at the trend line. Even if this makes a bigger correction, even if this is a first part of a bigger zigzag, right, then this bounce seems quite likely. So that's one scenario. The other scenario is that this is a triangle. This is maybe an A. Let's see, this is a B. This could be a C. We can go down. It could be ABC for downside, or if it's ABCDE later on, that would be another scenario. So this down move seems likely in both cases. Whether this will break this to the downside or whether it will break to the upside in a bigger correction, that remains to be seen, I think. So from that point of view, a tad higher probably would be nice, as you can see. But I'm not sure if we're going to get there, because at this moment we're already probably having divergence. Let's add. We can see that there's a trend line here, and there's a bit of divergence on the hourly chart. Double divergence, in fact. From a daily perspective, it doesn't look that way, right? Because we see bullish candles. But on lower time frames, we see that today could be bearish. And if today's candle ends up like, I don't know, somewhere like this, the same scenarios like the euro dollar on a daily chart, retracement of that candle, and there could be a trade down to that support line. All right, that's the daily perspective. If today somehow still manages to push higher and we have a pin bar like this, could also be reason for short. Or if today is a small inside candle, I wouldn't know why that would be the case, but if it does end up like that, and tomorrow is bullish, and the day after is in a pin bar like this, for instance, next week that could be interesting short. For the moment, though, it looks like I think that this is running out of steam, this upside. It's struggling at Keltner already, and we got a couple of two bearish candles here, wicks, hourly divergence. Let me get rid of this fib. So yeah, from this point of view, we can even add, let's see, one more trend line like this. From this point of view, I think we could expect a correction, but the correction could be in 3 waves like this, for instance. Let me see where the moving averages are. All right, you see, we're already breaking below the 21. If we have double divergence, the target is the 144 EMA. So it looks like we're breaking actually the triangle here, or sideways correction, breaking below the 21 EMA band, and there could be a move down to the 144. But it doesn't have to be in one shot. It could easily, this is the first break below the band. Typically you'll get an attempt to break above it again before moving down. So looking at from that perspective, let's see. I wouldn't be surprised to see upside failure here, downside, and this could be a bouncing spot. And today might end up, if there's that much volatility, I mean, pound can have that. It could end up as a doji. If we get that on the daily chart, then today's candle would look like this. And that could be anything, but we might still get that push up that would be nice on the daily chart before a longer short, a better short, a long-term or a swing short might be available. Anyhow, back to more reality at this moment. I think that looking at the 15, let's see. If it bounces here, I would look for failure here. If it breaks here, then it might be a bit different because who knows, we might get an impulse here. It doesn't have to necessarily retrace. If it does break below the 15 and we see some good 5-minute momentum develop here, like this, for instance, then I would wait for the 5-minute oscillator to go back, and it could be good to look for a short on the pullback here. So those are my two visions at this moment. The pullback in here, the failure here, or the break and pullback. Any upside I don't see unless price reaches back down 131, or if price does turn here and it shows very strong candles as it breaks, as it goes up and starts to break this trend line here. So it would have to break, it would have to show some good momentum, have to start breaking above 132. Let's put the Keltner on again. Let's see. Yeah, from a Keltner point of view, if this candle, for instance, breaks below the Keltner with the close near the low, it is breaching the Keltner bottom, and there could be a breakout to the downside. So you can use Keltner in two ways. You can use it as a bounce if it fails, but if there's a strong candle breaking through it, it could also lead to an impulse. Look at this, for instance, here. We see a break above the Keltner. We see a close near the high, and that indeed ushers in a phase of momentum and continuation. So that's what could happen with this bearish candle too. So yeah, that's it from from the pound USD point of view. If you like this Keltner, it is part of the MetaTrader 4 Supreme Edition, by the way, which if you trade live without markets, you can download, no problem. If you don't trade, you can try it though for a month for free, and just open a demo and you can try it. And it's part of the platforms here, MetaTrader 4 Supreme Edition. And there are a lot of things here. One of these is Keltner that we used frequently, as you can see. But mini charts is another one where you can have multiple, basically, time frames. You can look at multiple time frames. Let me add it quickly. Here you can see you have a smaller chart in this chart, so that's useful. You have very interesting order history, so you can look at the past orders. You have pivot points, Renkos. You can keep an eye on the spread like this, adding spread indicator. You can, there are other nifty things like candle countdown and trading simulator. So there are a lot of things there. So take a look at that after the webinar when you have some time. It's really, really beneficial. Yeah, a lot of nice tools indeed. So Keltner is one of them. So take a look at that. And yeah, the Keltner on the dollar yen is actually kind of in a support zone. It tried to break through, but it didn't. So it is, yes, in a way breaking, but breaking sideways. So it would be nice if it broke above this trend line here. If it posts with a very good 4-hour candle breaking through it, or probably in 2 candles like this, I would look for a bullish break and continuation. That could be a bullish breakout right there. Downside, I'm more inclined to upside, because despite the downtrend channel, I think that there could be a triple bottom here in a way, and I think that this could be a bouncing spot in the weekly. There's a 50 fib. This could be easily a hook back, and that 50 fib plus hook back, that could be strong arguments for a bigger rally. But I would like to see a break above this trend line. Then I know that there's a good chance the price will retest this trend line, and if it breaks above the channel, there could be a bigger reversal. That seems the most likely to me, but of course the other scenario is we are in a downtrend channel on the daily, so if we get I would say a daily candle, probably that breaks below this trend line, breaks below that support, breaks below the Keltner with a close near the low, that could be also equally so a breakout for bearish momentum. If such a candle appears today, I would be interested in trading basically a swing trade to the downside, and maybe intraday tomorrow as well. At this moment though, nothing. I'm not trading it either way right now. It's halfway this triangle, and it doesn't show me any kind of any potential that justifies a trade. I could take a trade and hope for the best, I guess, but that doesn't make sense. So no, it doesn't make sense here from my perspective. It would need to break support, or it would need to break resistance, and if it doesn't do that, it could just go sideways, and it just go nowhere. Right? It could use these support and bounce, go up a bit, go down a bit, go up, down, like that. So I rather wait for more confirmation. I rather wait for price to lead me, and I want to follow that lead. If you have danced salsa, for instance, before, like I did in the past, then a bit, then you know that the one partner, mostly the guy, is leading, and the lady, normally speaking, is following. Right? So one person is leading, the other is following. So what we want to do, in a way, if we're also a few folks trading is salsa exercise, then or dance, then we're following the market, How do we follow the market? We follow its lead. How do we know what the lead is? By setting up whatever tools we use, setting up kind of decision zones. When price gets there, we're looking for that and that. If it does that and that, then we're doing that and that, right? So I'm waiting for price to break up or down and not trading it either way if it doesn't show me that. Because otherwise, at this moment, as the follower in the salsa pattern here, I don't know what the dollar yen wants. Is the dollar yen the leader of all yen pairs? And I would say definitely if yeah, definitely it's the one to look at for yen, I would say indeed. You can also look at the yen index, just like you can do its dollar index, but it's not that common. So yeah, it's always good to look at the dollar yen, definitely. Yeah, Nikkei is also very good indeed. Let's see. There we go. Any particular currency pair you would like to take a look at? Oh, sorry about that. Let me quickly reboot it. Also, don't forget that it is still August. We're getting close to the end of it, so I think that things should pick up. But typically August is not the most volatile month. Actually, it's not been that bad for typical August. I've seen August that are a lot slower. This has been pretty decent actually for an August. Not bad at all. But yeah, typically it does pick up at the end of August, and we're getting close to that, I would say. So it should get better as we go along. That's another thing to think about. All right, I'm back with my chart here. Let's see. Oh, we can stick with the Aussie right away. Aussie daily chart showing an uptrend, but a very corrective one, kind of a mild one. Daily candle struggle here. We had 1, 2, 3, 4, 5, 6 candles not breaking it. And after the 6 candle failure, we see a pretty significant retracement. Yesterday I was interested in upside. I eventually didn't get filled, but had a pending order, but didn't take it. Deleted that one because of yesterday's bearish candle as well. And I think it looks bearish at this point, considering the daily candle is making a downtrend at this moment. Like this. But of course, that's just a mini channel within a larger up channel. Like this. So from that point of view, pretty interesting spot. Let's take a look at lower time frames, but there could be a break here to lower support. And lower support could be, for instance, this trend line. It could be this trend line as well. So those are the levels where price could fall to. On a 4-hour chart, you can see that not only the trend line, but the Keltner here is critical too. How will price respond to that Keltner? If it breaks below it, there's a good chance for a breakout to the downside. If there is some bullish pattern here, if there's a bullish pin bar, or if there's a lot of wicks, 2 candles with wicks, could be a bouncing spot in fact. So yeah, actually pretty interesting spot. And honestly, probably be following the euro dollar pound dollar too, right? So we can keep an eye on that because whatever the euro pound will be doing is it's partly dollar driven, which will influence this Aussie. So we'll have to see what kind of day it is, bullish or bearish. Kiwi, let me quickly change this template. All right. Kiwi looks more bullish, in fact, but it did have a doji yesterday. But it is trying to break resistance. It is looking like an ascending wedge, which is a bullish chart pattern, in fact, right, with higher lows, but a flat top. But yesterday's doji is not a breakout, obviously. So I think it looks more neutral. There is some good momentum here. There could easily be an ABC zigzag 2 here, just like on the other dollar pairs we mentioned. So um, this kind of is neutral, I would say. It looks bullish for the moment, but it could easily make a bearish correction. So I will probably follow the dollar too, I would say, at this moment. Pound yen. Wow, look at this monthly. Quite impressive. If the rise was impressive, the fall is even more impressive, isn't it? Boy, oh boy, what a speed. Anyhow, it looks like a mild correction here and could be set up for a follow through. Now we have double bottom, of course, at this moment, right here, but that could just be a correction and a break for follow through. We'll have to see how that responds. The better, I mean, the great pullback was up in here and the break. Now it's kind of showing a rising wedge at this moment, like this. But it definitely also depends on the dollar yen, right? Because if the dollar yen is going to break that 4-hour chart to the upside, like this, the pound yen will certainly follow a bit. If it breaks to the downside, the pound yen will follow. So we have to keep an eye on the dollar yen for the pound yen. Considering these bullish candles, probably would like to see it a bit higher. Here's a small supply demand zone. So if it trace a bit higher, bounce a bit more from this bottom, it would probably be better. If there's a bullish candle in the 4-hour chart, it could be breaking the rising wedge to the upside. Downside, I might need price to go to the 1-hour Keltner, something like this, for instance. That could be a breakout for downside. Euro yen is not interesting to me. Way too flat. And it's flat within flat. It's flat within flat within flat. So no, not going to skip that one. What else can we look at? How about Euro pound? Looks like it's retracing actually at this moment. As you can see, we had a bearish candle above Keltner. That could have been a good signal actually. I ignored that. I don't know why. But anyhow, looks like it's making a retracement at this point. Pretty strong bearish candle. So could easily retrace today back down, which means that euro could be a bit weaker than pound. I think that considering there's strong momentum, but this is going to run out of steam, I would say, eventually. Not necessarily here, but if it breaks this top, I would say there's plenty of divergence probably. Let's take a look. That would be double divergence once it breaks its top. So once it breaks its top, I would say it's in reversal territory or retracement territory. I would expect more euro weakness than Aussie in that case. At this moment, euro is stronger, more Aussie weakness. But once it breaks its top, it could flip with double divergence. Now, don't get me wrong, it doesn't have to be a reversal. It could go up. It could get the double divergence. We could see a three-wave correction. this goes back to the zero line, and it could easily still be a bouncing spot because consider this strong momentum, right? That could be still a continuation to the upside. We could put a fib from here to here, up, and we could have a three-wave down from down to the 23.6 fib, a bounce, then down to the 38.2, which could be a bouncing spot for move up to the 272 target, right? Something like that could easily happen. Let's see if that indeed occurs, but seems the most likely at this moment. So trade ideas could be even theoretically still small or long here, but that seems a bit iffy. Or a reversal trade here, or a reversal trade here, or then a potential bounce trade here, or upon the hook back here, or upon the break here for the target. Pound odd, that was a good engulfing twin. Really very, very nice correction. And there was divergence between these bottoms. So that is one way of trading an early reversal. If you have divergence and you see bullish engulfing twins, sometimes you get a correction like that. And it could be only one part of it. It could be an ABC zigzag like this. So at one point, this is going to finish. There's going to be a correction. We can put a fib from here to here, and we can look at these fibs, deeper fibs, for a bounce for that zigzag. For the moment, though, I wouldn't be looking at long. There is momentum up, but as I said, it's probably going to hit resistance sooner or later and make that dip down. All right, let's see. It is actually breaking above the Keltner several times. Here was the first time, pullback bounce. Let's take a look at the oscillator on the 4-hour chart. Momentum is pretty weak here to the upside. Hourly is showing divergence, double. So definitely not long. Here too, looks like with the euro odd could maybe pick one more push up here. But the pound odd, I think we'll be running out of steam soon. Doesn't look like that at the moment, right, with bullish candles. But considering the divergence, I would not be looking for upside. And I think it's rather close to a bouncing spot down to those fibs I just mentioned. What to look for? I will be looking probably for, it will probably make a little bit, maybe go into this zone, right? So it could still push a bit. Any 4-hour candle here, any 4-hour pattern up in here could be the signal that we're going to get the downside. So that's what I'll be keeping an eye on. Sorry, Darshan had a question on pound yen, whether it's a bear flag. Bear flag, yeah, it could be two. It looks, I guess, more rising wedge because of, which is also bearish. So I guess it doesn't matter that much. But because of the angle of the trend lines here, a bear flag, I guess you could do it if you draw it like this, these trend lines, if you connect the bottoms like this and the tops like that, you could see it as a bear flag too, indeed. It's like a channel, but if you zoom out or if you look at it on the daily chart, right, then it's definitely looking like a bear flag. Weak angle. So agree, definitely. Does look like that. So you can basically keep these lines on, I think, and also these both are good, I think. I'm not, now I don't even know how I had it. Let's see, like this. Not even sure how I drew that rising wedge anymore. Maybe like this. Anyhow, um, dollar cat. Ah, my cat doesn't like the dollar cat, so I guess we have to skip that one. Not just kidding. Dollar cat is looking like a bearish break. It is moving away. There's good momentum here. Um, oh, sorry about that, folks. I have to say hi to her because she demands some attention here. And yeah, it looks like a bearish break. It looks like it's pulling away. I think that this could be a retracement. But all in all, I think we still need to wait probably because this is strong momentum to the upside. Pretty good 50 pip bounce. So let's see how price responds at these targets. That could be the end of the zigzag and good turning spots. If price moves up to the minus 61.8, like this, and then starts to make a bull flag, I'm out because then it looks like a continuation. All right, so I think we talked about some interesting scenarios already on the forex pairs. Do you have any other, maybe some exotic cross that you think is interesting to take a look? We could take a look at some other instruments. Well, let's keep this template, why not? The DAX looks bullish, obviously, at this moment. And it's bouncing from these long-term moving averages with a inverted head and shoulders. And it broke the neckline, sorry, there. We had 5 waves up. Cheers, Bob. Thanks for being here. So I think we can expect an ABC. And I think that this could be a correction down to a fib if we put a fib from here to here. Right, we bounced off the 23.6 fib as you can see. So that makes sense. It's typical. So I wouldn't be surprised to see failure here and see a bigger correction down to the 38, maybe even a deeper fib, right, as we go along before we see a bigger bounce. There is one more option, and if it does show a good breakout here, then it could be an extension of a wave. It is possible, so we don't want to rule out the breakout here. But what I would need to see is probably some good 4-hour candle breaking above it, and I want to see the candles continue without failure. That means strong candles, relatively strong, and no bearish pattern here. These MA settings basically are a 21 EMA close. Well, this is actually a band, so this is a 21 EMA high, low, and close. Actually, there are 2 of them at this point, but the high and low are visible. The close would be in the middle. The long term is 144 and 169, or you could only use 144 if you wanted to make it simple. And there's a quick EMA here, the 8. The indicator is a Heikin-Ashi, which is good for trends. And maybe best, if you're interested in moving out, this special moving average indicator, it changes with the color. The color changes as the trend changes, the angle changes. Just send me an email, okay? Or if you're interested in Heikin-Ashi, it's possible too, but I need your MT4 trading account number because it's a special protected indicator. So I'm glad that you're here, by the way, Natch. I hope that you'll join more often. We take a look at the charts in sometimes different views. This is one of them. More indicators, off sometimes just Very simple with price action and in a Keltner like today. So oil, let's take a look. Uh, no comment. I don't know. No, just joking. It, I'm not a big fan of it at the moment. I could see it make a retracement lower. I could see it make a breakout higher. So I guess I'll just put these trend lines on and see what it does. More I don't have to say on it. Gold. Isn't a triangle, so if it looks like it's going to start a bearish correction here. But if it does break this triangle, it could still be a good breakout. But considering the weekly, this looks like weakness to me. And I wouldn't be surprised if it goes back to support somewhere down in here, probably looking at the tops and bottoms here. But if it does break, I mean, I want to be realistic. If it does break, there's still a good chance. If the weekly candle, but if there's a weekly candle with a big wick like this, that could be also significant failure, failed breakout. If we get this week push up and then failure or next week, and there's a big wick like that and a pin bar, oof, right? That could also indicate a start the reversal or retracement. All right, we can take a look at some of these crosses. Just wanted to give you an indication of webinars coming up. Tomorrow we take a look at the story behind wave analysis, complex corrections and strong momentum. So I want to focus on how we can actually use the waves to our benefit without being necessarily a very intense wave analyst. So that's the focus of tomorrow. Let's see. Next week we have, of course, Nennet is going to be back soon. He just has a 1 week break, but he'll be back the week after. But next week you do have Forex Strategy and, of course, My Life Trading Room webinars, which I cannot see. Next week? No, not next week. I'm also taking a break. Sorry, I forgot. both of us are taking a break. I thought only Nennet, but I forgot my notification. No, but next week we actually have simple strategies for trading on the daily time frames. I'm not sure if Nennet is joining, but I will be there though. Next week, Thursday, there's one webinar. So this Thursday, tomorrow, and next week, there's a webinar. And then after that, there will be more webinars. Yeah, I need vacation indeed. If you forget about it, right? So sorry for the confusion. So this week Thursday, and then next week Thursday, and then the week after, things will pick up again. We'll have more webinars. That's one thing. Secondly is I encourage you to take a look at the education section. Here you got articles, and also I want to highlight, let's see, I want to highlight the web trader as well. And also here, if you click on news, by the way, and then we'll move on, you might want to take a look at the UK bank holiday trading schedule. But what I found very interesting is down in, it's the second page already. This one, IMO Markets releases the latest MT4 Supreme innovations. You'll find more info about the trading simulator, so that's something useful. This article shows all the new updates, so that's on news. About Us news. Day trading at 1 September is on. No, because 1 September. Yeah, that's on. Yeah, sorry. Yes, it is. That will be the only webinar next week, in fact. Where is it? I got rid of it. Okay. So next week there's only one webinar, which is day trading. Simple strategies for day trading on the daily time frame. That will be the only one, and then the week after we'll pick up. So from now on, there will be only two webinars on this week Thursday and next week Thursday. Other than that, Aussie yen, I kept this template on purpose. It's really going nowhere. It's just basically still making that correction we talked about. I don't see much here, folks, really. It's, to me, not that interesting. Other than that, these are pretty much similar movements. Pound is making a strong upside. It could run into resistance, I would say, on these crosses. Here's some minor differences, but not a lot of differences. The yens are going sideways, so there's really not much to talk about here, I would say. All right, so I guess we can wrap it up if you don't have any questions. Keltner, just to give an extra conclusion on the Keltner. Basically, if we go back to, let's take a look at this. Forgot to look at the 5-minute chart. So sorry. And now it's, yikes, got distracted there by the webinar. But you can see how what we were looking for here, right? We said 5-minute chart. If it makes the head and shoulders, if it fills with 5 to 6 candles, 1, 2, 3, 4, 5, 6 candles here, right? So this swing high, swing low is probably over in that case. Once you get a lot of candles on the right side, it's probably weakness. And New Zealand dollar, we'll take a look at that. And you'll probably have the head and shoulders, right, because of the weakness here. And that indeed happened. And we're getting pretty good bounce after that. Not a lot. On the 5-minute chart, it looks spectacular, but 5-minute chart, it's a good move. So it does look like a bouncing spot now, but that's not the only way I was talking about, right? The 5-minute chart was one option. The other option would be the hourly chart or the 4-hour chart to look for the candle being bullish, which seems like it's going to happen. And it seems like, I don't know why this trend line we had it on, but this trend line, it seems already earlier ago we said it was probably a bouncing spot. 1-hour, 4-hour, or 5-minute chart were ways to trade it. So that's indeed happening. The Keltner is useful to look for basically breakouts or bounces, right? So here, for instance, bounce. But you get breakouts too, for instance, here. Right? You get a breakout, not a big breakout, but sometimes more than other times. But you want to look for the first push, right? If it happens too often, you're getting divergence and you could get a bigger correction. But this ultimately took a while, but you get the breakout. So when you have a candle, Japanese candlestick, clearly breaking through it with a good close, there's a good breakout potential in most cases, or a decent amount of cases. If you have the opposite, if you see weakness like this, it could be a bouncing spot. Kiwi, it's following the euro. It could be a bouncing spot too. Especially if this is bullish, then it could be bullish too the rest of the day. But it depends. We'll have to see how it responds up in here. This is still resistance. So even though we got a good bullish candle here, we could get a follow through of that. But we'll have to see how it responds here. If it can break through it or if it shows weakness. So I think a candle like this could be a good signal to trade. But I would be very keen on moving the stop loss to break even as soon as we get one more candle after this. All right, so euro dollar bounce, to sum it up, pound dollar either basically It doesn't break here, so it's not bearish as yet. I think that there could be failure here, but if there's no failure, it could be a bullish break. I think failure seems more likely for a bigger correction. That was my view, as I said. But let's see if it fails here. I would need to see some bearish candlestick patterns here. If it has a bullish break above the Keltner, there could be actually a bullish breakout. Dollar yen needs to break support and resistance. Pound yen too, but looks like a bear flag. Euro yen is not interesting. Aussie bouncer break spot right now too, just like the Kiwi. Well, Aussie more actually bouncer break. Same Euro odd and pound odd I think are looking into a turnaround retracement if they show candlestick patterns and signs of weakness. I think they're running into resistance. So that was the quick recap. Thanks again for joining. Hope to see you tomorrow and wish you a great day. Cheers.